Thank you all for making time. I'm Melanie Schmidt with Timpano Consulting, and have the opportunity to work as a strategist across sectors, and are working to collect advisors and resources for people during these uncertain times of being connected, staying productive, unleashing some creativity, and learning more about a lot of the resources that are out there. So that's the purpose of our call today. With me right now, we have a number of advisors. So Mindy Rowland with Spark handles legal and HR matters for small businesses and nonprofits. And so we also have Melissa Scholz with Scholz Nonprofit Law, handles a variety of issues for nonprofits and transactions and compliance. Sally Martiniak is with us with Community Reimagined, former president of Forward Community Investments, very well versed in the nonprofit arena as well as general business savvy. And then Jim McNulty with Oak Bank has joined us as well, and he is here providing some insights from that financial institution perspective. So hopefully all their mics are going to work as this thing moves along. In theory, all of you are on mute, but would encourage you to use the chat feature to put those questions that you would have. Sometimes we'll answer those in process, other times we'll work to pull them out. And again, we will be recording this session, sending a blurred version out to everyone, as well as including links for resources that are mentioned here, as well as things we've collected. And before we go ahead and dive in, we are going to focus a lot today on workforce and financial related issues. But I'd just like to take a moment for all of us to just pause as well. And I'm going to read some words of John Donahue, so that we all have a moment to just center and find our way into this conversation. This is the time to be slow. Lie low to the wall until the bitter weather passes. Try as best you can not to let the wire brush of doubt scrape from your heart all sense of yourself and your hesitant light. If you remain generous, time will come good, and you will find your feet again on fresh pastures of promise where the air will be kind and blushed with beginning. I was reminded the other day that these are not, in fact, unprecedented times as much as they may be disorienting, unusual, uncertain, and filled with a lot of angst, but there's also a lot of opportunity that's coming forward. And so what we're also wanting to do is to convene people to provide you with some insights, answers to those questions, and access to some of the resources that can help you move forward. And so in doing that, as I mentioned, we have Mindy, Melissa, Sally, and Jim on the line here today with you. And we are going to provide an overview of some information, and then we will also open it up and answer questions as best we're able, knowing that the information is changing quite rapidly. And so we're doing our best to provide you information that we know of as of March 31st, 2020, just after 1 p.m. Central Time, and to make sure you're doing that due diligence as you move forward. Knowing that workforce issues are one of the things we talked about in last week's call, and there have been some continued work on that front. Want to do a pause. We'll first look at some of the workforce updates, see if there's any information that Mindy or Melissa would like to provide, and then we will move into some of the financial matters with Sally and Jim jumping in. So Mindy, is there, Mindy or Melissa, anything that you would like to do, as particularly any updates for those who are joining us again this week from what you shared last time?
Sure, I can start. I think probably the biggest update is that as of last Friday, Congress passed and President Trump signed the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act, the CARES Act. One of the biggest things for employees and employers alike is the extension in addition to substantial unemployment insurance payments. So if you're not familiar with that, definitely get familiar with that. It provides an extra $600 a week for your employees. That includes independent contractors and gig workers. And so what that means is, on top of whatever benefits they're getting through the state, they get an additional $600 a week. Even if they weren't normally permitted to get unemployment, chances are they're allowed to do it too. The reason we care about this as employers right now is if you have laid off some of your employees and now you're seeing some of these loans come down the pike that we're going to talk about in just a little bit, you may want to do the balancing act and figure out whether your employees are better off staying laid off and obtaining the benefit of the unemployment, which has also been extended out to 39 weeks, which is about 13 weeks longer than what we've got here in Wisconsin. And so you may want to do that balancing act for automatically trying to get the loans and bring them back. Some of your employees may be better off just taking unemployment at this point, and that is no money out of your pocket whatsoever. So that's probably the biggest one for purposes of this call that actually ties in pretty nicely with the financial components and the loans that we're looking at.
Great, thank you for that, Mindy. Melissa, what would you add into that or provide in terms of an update?
Yeah, no, I think that the point that Mindy made is a really important one, is that you do have the option, you know, to let your employees access unemployment now and bring them back when you can take advantage of the loan, and that will not penalize you when it comes to considering forgiveness, the forgiveness provisions of the loan, which of course only apply to 501c3s. Mindy, did we cover on the last call also the I don't know, I'll call it the deferral of the payment of the payroll taxes? And
that'd be a great one to talk about too, because I don't think we did. Yeah, that is also something that came through with the CARES Act, and I think it was definitely on our radar last week, but the law hadn't been passed yet by, I think at that point, the House hadn't passed it yet, and of course it hadn't been signed by President Trump yet. So the, let me just look, is it the refundable payroll tax credit. So what that does is it allows eligible employees, and here we're talking about anybody with 500 employees or less, a refundable credit against your payroll, and it's equal to 50% of the first $10,000 of each of your employees' wages. I am not an accountant, and I'm not a great finance person, to be frank with everybody on the call. But generally speaking, what that does is it allows you to get a credit against all the taxes that you're paying on your employee's payroll, up to 50% of $10,000. Does that sound right to you, Melissa?
Yeah, that's, I actually thought it was 5,000, but all of this is moving so fast that it may be, I've gone to 10. There's obviously some rules about, being able to show, you have to demonstrate that you retained a certain amount of employment. I think it's like 80% of your, of your payroll. And then this one does not marry with the loans that we're going to talk about, so you can't take advantage of both of them. But there is a menu out there, so you will have to. And I know people are trying to scale up to help you all make decisions, but that is one of them. And then there's also just the deferral of the tax of the employer portion of the payroll taxes that can be deferred throughout 2021.
And one of those resources that's available is in the chat, but it's also one we will send out in terms of looking at the loans available for nonprofits in the CARES Act. The National Council of Nonprofits did a side-by-side table that breaks that down pretty nicely, and again, just gives you that place to start. And similarly, you'll see in the links that are sent around, similar for businesses as well. I think one of the things that both of you in your comments make clear is that this is also a really good time to be talking with your, if you are fortunate to have a staff accountant or a staff bookkeeper, to be looping in with them in these discussions, as well as talking with your accountants and auditors, bankers, your financial advisors, and if your finance committee, if you have one of those, or those other folks are available. And I know, Sally, that's something that you and I had talked about not even before we contemplated this call, is just the value of reaching out and having those conversations. So we could maybe bounce it over to you, Sally, to see, as you've been processing a lot of the information that's been happening, what are those words of advice and that you would share with both nonprofits and entrepreneurs who are on the call today?
First of all, going back to how you started the call, Melanie, is, the whole idea, I know it's Melanie, Melissa, but the whole idea that, to take things slow. I was on a call earlier today with a board, with our board and executive director of a nonprofit that I sit on the board. And one of the things that I really felt was that the staff was really operating at just, warp speed. And I think the whole idea is slow down right now, because first of all, there is so much information coming at you, going to what Mindy had said is, there's a lot of things that you need to consider right now, unemployment versus bringing people back and so forth. But you just have to stop and think about, what are those options, and then really do a careful assessment of that situation. So that would actually be my first advice, is just stop and breathe, because otherwise, a lot of this information is just going to pass you by too. And that's the other thing. You know
what, Sally, that's really good advice, because I just gave wrong advice in what I just did, because I was moving fast. So just quickly on this on the payroll tax credit, I said you have to retain 80% of your employees, which is wrong. It is, you have to show that your revenue dropped at least 50% in the first quarter compared to 2019. And then the credit phases out once your revenue exceeds 80% of the same quarter. So I knew there was an 80% in there. It was just wrong.
You also bring up a good point too. It's the fact that as an executive director, as the business owner and so forth, you're not expected to know everything. And that goes back to what Melanie said, is rely on the people on your team who do know bits and pieces of the information, and rely on them to share that with you, and just ask the questions. I was on an excellent webinar yesterday that I know that they're going to continue to have, that was hosted by the SBA for the loan programs that we will talk about. And really, there was so much good information on that. So, so it really is just looking for these sources too, finding them and taking advantage of them as well. So, just going back to what Melanie had brought up as far as banks, and I know that, that we're going to talk, Jim will have a chance to talk about that. But I think that now is that time for, and I'll just speak from that nonprofit hat on, is for you to really reach out to those advisors, your banker, if you have a loan with them right now, if it's with a bank, a community bank, a national bank, a credit union, a CDFI, reach out to them and talk to them. I cannot actually emphasize that enough, because they're going to have information that they can share with you, but they're also going to have a chance to know where you're coming from and what you need right now. And so that would be my, again, is slow down, assess, and determine and monitor what it is that you do need, because you can't go after everything at once.
We don't have enough, we just all don't have enough energy, and there isn't enough time for that. I think it also speaks to the value of ensuring that there are so many people out there often who want to be of service and who want to help, but they may not be in the best position to do that for you, because they may have a bit or a piece of the information, but they may not have the actual information. It's that opportunity to, again, have a game plan, know what you want to do, then work to engage with your board or other advisors, and then work with the experts to move that forward in a way that works best for you. Jim McDulty with Oak Bank, is there, what would you add to our conversation, or what guidance would you offer? Again, also bringing in not just the nonprofit perspective, but that business focus as well.
Yeah, I think Sally nailed it. Just reaching out, getting in front of your advisors. I'm speaking from the banker angle, but just, whatever potential needs you might have, and then being well versed. There's some good things that, I'm not as upfront on the unemployment, but have had that exact discussion where here's what the loan options are going to be. Maybe the unemployment is better, maybe not. It really just depends. But just using your advisors, that's obviously just repeating what Sally said, but I agree, getting in front of those that are in your circle, gathering as much information as possible, and just being patient, because this is literally unfolding still day by day, hour by hour. Even though the law is passed, there's plenty of people throwing advice out there. Helpful emails, call your banker and apply. Well, it's not even here yet, so you can't apply. So, so just being patient, because there's a lot of misinformation, or probably not misinformation, but partial information. People are trying to be helpful. So you just need to hang in there and not get too frustrated with inconsistencies out there with messaging.
And that was one of the questions that was submitted in advance of the session today, was wondering a bit about timing in terms of when might a business expect funding, and knowing that there are things that are still being out there. This was only passed on Friday. Everyone's figuring it out. Jim, do you want to speak to that at all in terms of timing and what it also might mean with overload, in terms of, since everyone is going to be following the sage advice to contact their financial advisors or others, there are only so many of them to go around with all those clients. So Can you speak a bit to that? Yeah, you bet. And I'll try not to go on too much and be upbeat about this whole scenario. So the law was passed. This does need to get interpreted, and rules on what exactly is going to happen to get people this money has to be issued by the SBA. I am sure they're working feverishly in different parts of the country, but we do not yet have the ability to apply. We don't know what the details are of this program. We know the broad details in the legislation, but the exact how to apply, what information is going to be needed, and how the process works is still yet not determined, which is very frustrating for everyone, us particularly, because we're having to constantly tell people we don't know, hang in there, here's what we think, gather some payroll data and this, but really it's not out there yet. What I expect, hopefully—
Jim, it does say 15 days from when the law was passed. So I think April 12th, we expect regulations for the banks.
Yeah, and formal SBA guidance is up to 30. So they have up to 30 days to respond to this. 2 weeks is the best guidance, but we're actually hoping it's potentially this week. So that's just another thing. Which SBA source you talk to, we're hoping there's some guidance this week on how to move forward. But again, it could be still creeping into next week before we even know how to proceed. And then again, we're trying to get our bank retooled right now and get ready to take applications. And we just can't do too much right now because we don't know. I'm completely guessing, but even when you finally get to apply, it's going to be, I don't even know, another week before funds. I'm completely guessing on how quickly the turnaround is going to be for funding. And then as Melanie talked about capacity, again, if you can imagine, $350 billion of potentially free money is being dropped onto banks all around the country, largely first come, first serve, and it's all going to start on one day. It's the bottlenecks that's going to hit the bank is really going to be unprecedented. We are starting to think about the decisions we're going to have to make. There likely will be some very deserving organizations that just don't get this money, and it's frustrating because there's just going to be so much time, so many people, so much capacity. So that's frustrating discussions, but there'll be triaging going on at many banks on who needs this the worst, because everybody needs it. So I don't know if that's helpful angles on it, but being ready, getting information is going to help, and if you have a relationship with your bank, that's helpful as well.
So
and I think,
to that point,
so Jim, can you? Sorry.
I just want to add is the fact that there are actually 2 loan programs that they're talking about.
Yes.
So one is the expanded EIDL, which is the
economic injury disaster loans.
Correct. Correct.
Disaster loans. That one is available right now, and that is actually available online. So that's something that is not going through you, so you get a little bit of leeway there. And that actually provides a $10,000 quote unquote grant or forgivable loan. So for that part, and what I heard yesterday on the webinar, it was, like I said, there's a list that Melanie will provide that has upcoming webinars. Applying for the EIDL and the new Paycheck Protection Program, which is what Jim's talking about, you can apply for both at this point of time. So they may say otherwise, later on, but right now you can apply online for the first one, which is the expanded EIDL. And with that one, the loans are up to $2 million, I believe. And you can also get, so let's just say that hypothetically you apply for a $100,000 loan. First of all, the first $25,000 does not have to be secured. So if you only ask for $25,000, you do not have to provide collateral for that loan. If you ask for $30,000, you have to provide collateral for the loan. But the first $10,000 would be forgiven. You can ask for an advance, and then that would be, you could get that advance in up to 3 days, and you would not have to pay that back. And those links will be provided, through Melanie too. But then it's the program that Jim is talking about that provides a much more lucrative forgiveness that is
correct
in the works. Yeah.
That's a great distinction. What I largely was referring to wasn't the EIDL, which Sally just talked about, but the PPP, the payroll protection, which is going to be the one getting guidance soon.
Yep. And Jim, you said within the bank there will be a lot of it may be oversubscribed, and so you will be making some decisions about who needs it most. Anything you can comment on in terms of how one can expect those decisions to be made, or how to build your case? Yes.
Right. Yeah, that's a really tough one. Again, it's where we don't know what's in front of us. We don't have actual applications to make decisions on yet. And again, this will likely be bank by bank. So this is completely not a bank policy. So take this for what it's worth. This is just me based on discussions, but we're treating it almost like an ER triage where, hey, this person is very, very sick, but hey, this person is about to die. I'm sorry, very, very sick person, but this person is more critical. And how do you look at that? It's really just a case-by-case situation based on your organization. So that's a fuzzy answer, but because it's going to be, maybe I'm wrong. Maybe we'll get in a large amount, but a handle amount of applications that we can work through on a first-come, first-served basis. That might be the case. We're just projecting that this is going to be some historic demand, and we're going to just have to do our best jobs as professionals, caring professionals in a community bank situation to make the right calls and try to get everyone, because we want every client to get free money. I mean, let's go. Why wouldn't we? But yeah, so that's, again, fuzzy answer, but it's because it's going to be a case-by-case scenario.
Well, it's a fuzzy answer, but I think it is an accurate answer in terms of not just what your institution will be looking at, but really what all institutions involved with this will be looking at, as well as what other organizations that are providing emergency relief are doing the same thing. And so it really, a lot of this comes back to building what is the appropriate case statement for your access to what are essentially emergency funds to move your organization forward. And so this is the time when understanding, who is your audience, what are they looking for, what is your need, how is this connected to the situation in front of us. You have to be able to hone that message and really lead with your values of what you're standing for, drive it with your mission, and hopefully point to both your long-range financial situation and long-range impact, and also what you are doing right now and how this has had an impact on your organization. So really the time to take stock of what has happened, be able to document it and back that up with good evidence, good case studies, and examples of what you're doing to work through this, how you're prepared to do it over the long run. Sort of that great opportunity for messaging 101 through the lens of this COVID response. wanted to, I know there's a lot more we can talk about on the finance. I want to also attend to the chat that's happening. There's a lot that's coming in related to the unemployment as well as some of the workforce issues. And I know Mindy's been doing a good job of jumping in there and answering in the chat as things go. But I think an opportunity just to pull that out of, there's a question that has come up here and in other forums in terms of people who have been hired some time ago but didn't actually start. And so they're actually not on the payroll yet because their start date hasn't happened, and what sort of options might be available to employers who have hired someone who hasn't yet start. Mindy, might you speak a bit to that and any of the other things that you've been noticing that have come up?
Sure. My understanding is, and I think this is probably, I agree with Melanie, it's probably not a unique situation in that we've got employees who, before this all happened, you interviewed them, maybe gave them the job offer and they were going to start a couple weeks from now. Business takes a downturn, all of a sudden you no longer need that employee, or you no longer, your business is maybe no longer running, or you just have such a reduced workload that you just don't need the employee. That $600 a month under unemployment, what has been described from the DOL, Department of Labor, is that should still be available for an employee who is about to start but couldn't start because of the economic downturn, business slowdown, or anything like that. So they should still be able to get that $600 a month. And I want to make sure that you guys understand they're calling it unemployment, but really it's just, think about it as just a mechanism to get people money. They already have an online system where you can apply and then spend money around. They're not even asking employees to have to show that they can't work, for example, or that they looked for jobs. Even if you quit and you quit for certain reasons, you're probably still going to get this federal component of the unemployment. So think about when we say $600 unemployment, really it's a $600 paycheck coming from the federal government. In certain circumstances, employees are eligible for it. And again, not just employees, but contractors and gig workers. I actually advised our housekeeper, who's a sole proprietor, that she should be applying for this unemployment. And she said, well, I'm still working a little bit. That's not the case. If you've had an economic downturn, and even if your hours have been reduced a little bit or a lot, you still are eligible for the $600. And you may also be eligible for some of the state unemployment too. Keep in mind that as an employer, this $600 that we're talking about, it does not come out of your pool or your unemployment fund. It's not affecting your numbers or your rating. It really is just a mechanism for the federal government to funnel money to a certain category of workers in the United States. And I think that's probably the best way to think about it, because when we start talking about unemployment, and that's what they're calling it, don't get me wrong, but when they start talking about unemployment, people start thinking, okay, well, should I lay my employee off? Is that a better plan? Or should they quit? Is that going to affect my rating moving forward? Do I have to pay some of this money back? And if you think of it just as a mechanism to funnel the money through this category of employees, I think that should provide you as an organization some relief.
And Mindy,
this is really important. Sorry.
Yeah, Mindy, are there additional steps that people are needing to take in order to access that $600 versus going through the state?
No, you apply through the state. You use the same mechanisms. So you go to the wisconsin.gov/UI or unemployment division, and you apply for the insurance, and the federal government is giving that money to the states in order to distribute it. The other thing is that Wisconsin, like many other states, have a 1 week delay before they provide unemployment. One of the things that the CARES Act did is they said, states, we're not okay with that anymore. We're taking away that 1 week delay. So there's no reason to wait or think that you're going to have to wait another week. Really, your employees should be applying right away, and they should be getting that money as soon as they can turn it around.
And Mindy, for self-insured, same thing, self-insured employers, the same issue as far as not coming out of their pool. The $600 is available, right?
That's correct.
We're getting a lot of questions about any help for the self-insured employer.
Yeah. So people who are self-employed, whether they have an unemployment insurance account or not, you've got a lot of people who don't have an unemployment insurance account, so they may not think that they're subject to it. If they're a sole proprietor, work on their own, do contract work for other businesses, It doesn't matter if you've got an unemployment account or not. The process is the same for applying.
I'd also
Sorry,
like to highlight.
I meant self-insured. Sorry, Melanie, just need to clarify. I'm talking about nonprofits who have the option to not, to not pay in to unemployment over time and have self-insured. And so we're getting questions about that, a lot of questions. My understanding, there is a provision I actually think it was the one before the CARES Act, where there is support for up to 50% of the unemployment expense for the self-insured employer. And we can follow up separately on that. And then this additional 600 that Mindy's talking about.
Yeah, so to clarify, I appreciate the distinction between self-employed and self-insured. For our purposes of our discussion, it's the same. It's people who don't have an unemployment account, but who are able to apply under this scenario. And that's whether you're self-insured, self-employed, or you have a UI pool, and that's how you go about business. Either way, you should be able to apply through the same mechanism.
And I want to call out, I think there's been a point made, so thank you to Laura on the chat for sharing some clarification that I think is really important to point out, is that when we're talking about the loans, they are just that in terms of being loans. And so there's a lot of discussion about certain things as being free money or what that might mean. And so I think it might be also important as you're weighing what your options are, to make sure, again, and as Sally had pointed out at the beginning of the session today, make sure that you're pausing to really understand what the implications are and what your needs might be, because there are certain restrictions for how some of the monies can be used. And also, while some of that includes some forgiveness provisions, even if something is qualified as a no interest loan, if it's a loan, it still needs to be paid back. And so understanding that, and I wonder, maybe Jim, if you could speak to that, and then Sally, you could offer some additional context around that.
Melissa had her finger raised. Does she want to have a quick point in that?
Well, I just want to point out that I saw somewhere where someone was saying that only 10,000 of it could be forgiven, and on the Paycheck Protection, Act that we're talking about, that's not true. So there's this 8-week period. So go ahead, Jim. Do you want to comment further on that? But
yep, and again,
we need to distinguish these two programs.
Yes.
Yeah, small print, still to be determined.
Yeah.
The EIDL program, which Sally talked about, which is open and you can apply for, that can be a large loan, of which the first 10,000 can come more quickly and can be forgiven. Now, the PPP, Paycheck Protection, is potentially completely forgivable if you do it correctly. There will be a loan amount that you can get based on historic payroll that you qualify for. Once you get that loan amount and are given the money, if you spend it on the right things and then document it correctly and come back and ask for forgiveness based on that documentation, and it looks like it's specific payroll, it's rent, it's some utilities, so it's some very specific expenses. If you borrow the money and spend it on those right things and document it right, it can be forgiven. If for some reason you don't spend it on the right things or some non-forgivable things, it's still an attractive loan in a stressed time. 4.25%, you have up to 10 years to pay it back is what it looks like. So it may still be a good loan, but some or all of it may be forgivable if you do it right, based on details yet to come.
And, and also to Jim's point is the fact that it's my understanding, at least, and I can speak to the EITL, and you can too, is the fact that that there are no fees for either of the programs. And there's also no prepayment penalties. So you can apply for them, and then if you can pay them back earlier, that would be fine also. So
nice. Good.
And the one thing I do want to add, though, is that while you can apply for both programs simultaneously, you can't apply for the same use simultaneously. So you can't say, I'm going to be using this for, for payroll, and I'll be using this for payroll as well. It has to be two specific uses.
And I'm also going to, I'm going to take a chance here, everyone. So as I mentioned at the top of the session, this is about some experimentation here. So I am going to attempt to share a document with all of you so that we can see a bit of some of the side-by-side that I mentioned we'll be sending out. This is a PDF version of the grid that was put together by the National Council of Nonprofits that provides you with some information about the Paycheck Protection Program, the PPP, that is distributed through local financial institutions, as well as then the expanded EDIL and emergency grants, as well as the mid-size loan, that goes through the Small Business Administration. And then it also includes some mid-size loan program information, so that in this table, they've attempted to give you that brief description in terms of eligibility, dollar amounts, guarantees, the use of the loan terms, things of that nature. So that will be included in the resource link that is sent out with the recording of this call, but wanted to just provide that as a reference so you could see what information would be coming. And hopefully you were all able to see that, and then you're all still here on the call so that we can continue to answer additional questions that might be coming up.
Jim, I have a question for you.
Yes.
Are our community banks, or any bank, does someone have to be a prior client in order to apply with you for the PPP program?
It is my understanding that you do not. One of the earlier, maybe the EIDL isn't through a bank, but there was an early initial grant that looks like you had to be through a bank you have a relationship with. I do not think that that's going to be a restriction with PPP, although again, we haven't seen the rules yet. So what you're likely going to run into, and again, we will just have to see how the demand happens. We are currently taking the stance with what we anticipate for volume, that we're going to very strongly prioritize current clients, those relationships that we have, keeping those businesses going. And then if we're able to, to foster new relationships, then great. But we're suspecting we're going to have our hands full just supporting current clients. But again, I do not think that restriction is going to be there pending the final information.
So is there something that a nonprofit, a small business can do now in terms of having a conversation with you, or bringing information to the bank, or starting to compile information that would put them ahead of the curve?
Yeah, and again, this is still fuzzy. I hate having people do extra work, but having general up-to-date financial information. If you got the books closed through year end, maybe if you even have some initial first quarter information, that's helpful. Detailed payroll information really does seem to be a key right now. So if you use a payroll processing company, or you have an accountant, or external or internal, having all of your details on your payroll is likely going to be an important first step. Your 941 filings, or if nonprofits, do they do 941s or something equivalent, where you do your quarterly, pay your withholding taxes and all that type of thing. If I were to guess, I would say that's what it's going to be. You're likely looking at 12 months worth of payroll data, like a rolling 12-month average, supported by your 941s. Just a guess, but that's how we're positioning things right now. But in general, just having really good up-to-date information on your payroll. There are some specifics, and one person, David, I think in the chat did mention that employees over $100,000 are excluded. So there are going to be some of those nuances to come as well. So there's going to be basically a formula. This number of 12 months divided by 12, excluding this type of compensation, multiplied by 2.5, ta-da, gives you your magic loan amount. So again, in the end, just having detailed payroll data for 2019 and 2020 is probably the best thing you can gather right now.
I think it's also one of the things that has been interesting as we work through these unusual times is that they're really also bringing to light many opportunities for people to be using really good organizational practices. So one of the things that I'm encouraging clients and others to do is to really think about, yes, we are all of a sudden in the middle of something that we didn't anticipate. And this could have been just about anything affecting your organization. It just happens that it's affecting entire communities and countries and global societies all at the same time. So if you're in that emotional place where you just need to keep up, it's okay to give yourself grace to just keep up. What I'm encouraging you to do is to have a notebook or a journal that is with you, where you can write down those things that you're noticing of when you have a moment to breathe, or you have an opportunity to garner some resources and support around you. Some of those things that you'll want to attend to help get the organization in position for these types of activities that are going to occur down the road. This is also the time when you start thinking about the opportunities for securing new loans, reaching out to donors and having a different story to tell to them, or modifying that. What are the scenarios ahead of you? So if you're thinking about pursuing funding, some of that may be survival funding, but you also need to be prepared. What if you don't get that? And what are those hard choices, the if-then propositions that you really do need to start thinking and talking through, so that you don't need to necessarily reduce your services because that's what a scenario says, but you need to be able to be prepared for it. So my hope and my encouragement to everyone is really to do as much cataloging of the good achievements and new ways of doing things that you're discovering, as well as going through the tough conversations about scenarios. And sometimes you have those potentially 5 to 7 minutes or even a couple of hours when everyone else who's in your residence is not bothering you, to find those moments to really carve out some time to just to focus and be developing that habit of thinking that really will serve everyone well moving forward. Melissa,
there's a lot of questions. Yeah, a lot of questions on the 100,000 issue, and a lot of good answers coming through if you can read them. But I think what we do know is that it's the first 100,000. It's not that that employee is excluded altogether. The detail around, I think it's a good question about what if you're part-time, you know, like is it a percentage? Like that level of detail we just don't have at this point, or that I'm aware of. You know, I know it's a 800-page bill, you know, so maybe it's in there somewhere. But we'll keep track of these questions, and if we find answers on those, we can follow up. One other quick thing too, just while we were talking about finances, is you don't want to lose track of it. It's not much, but don't lose sight of the fact that there is a new charitable tax deduction of up to $300. It's above the line, which means that you don't actually, you know, it's not, you don't have to itemize in order to take advantage of it. So I sure hope any communications people that are doing solicitations right now for, you know, for contributions are pointing out to people that there's a $300 charitable deduction there.
And there were also, and Melissa or Sally, maybe you can expand on this a little bit more. My understanding is that within the charitable giving incentives that those caps were lifted, there were some suspensions in terms of the required minimum distributions that go into effect for folks who are over 70 and using that as their philanthropic mechanism. And that there were also some adjustments made from a corporate perspective, where the gift limits were adjusted to from a 10 to 25% of taxable income, and that the ability to do food donations, the cap on those was also raised. Melissa or Sally, do you have additional insights on that based upon the information you've been processing?
No, I think that's right. Those numbers are there. We can send that out. So, you know, those details are important, that there is, used to be, you know, that a business could only deduct up to 10% of you know, charitable contribution. Now it's 25%. I don't remember the exact number on food inventory, but definitely made more advantageous for the donor.
Great. Sally, additional context that you would provide based upon what you're hearing?
No, nothing from what Melissa has added.
So I'm going to take an opportunity as we're moving toward the last few minutes of our call here today. I'm going to put another poll out there because part of what we all have to process is not just all of this information coming down, but also how it's affecting all of us and what it's able to do for our organizations. Because yes, these are challenging times, but they're also wonderful for creating space for innovation. And so I'm curious, multiple choice. So which best describes how the pandemic is affecting your organization? I think one of the challenges that we all are facing is we see this coming at us through our individual lenses and through whatever we're processing in terms of social media and other things out there. And what I've been really impressed by, particularly I've seen that with the not-for-profit community, but also with small businesses and others, is really the creativity that's coming out of this and the different ways people are finding to use technology differently to engage and communicate their message and put that out there. And so really believe that, again, times of uncertainty, but it's also been said, you know, don't let a good crisis go to waste. So use this as an opportunity to get some of those things in order, to celebrate things, to build those connections, and to reconnect with people. It's been fascinating both on a professional level, how willing people are from all over the country and all over the world to lend their expertise and support right now, as well as looking at just different ways people are doing things. So we'll give you 2 more seconds to put in on that poll, and then I will share those results so you can all see what effect it is having. And right now, what you'll notice is that for those who are on the call, what we see is it's reinforcing relevance. And that's something that I was in conversation with another consultant, Mark Pittman, who was talking about development and fundraising and this question of relevance. And if you don't find that you are relevant now, how were you relevant 2 months ago? And how do you intend to be relevant 6 months from now, or a year from now, or what looks go? And the only way to do that is to unleash that creativity, find those opportunities, and connect with others and with yourself in ways to really have that self-care for all of the anxiety that it's producing. So that's how it's affecting us. Again, I will remind everyone that we will send out the recording. We will send out the list of resources. Also, there's contact information. I know Mindy and Melissa have said that they are happy to be connected with you after this. So I'm just going to briefly share a screen that will include some of that information for all of you. At least I'm going to attempt to do that. So you can have that information. One of the questions came in of, you know, if you looked into a crystal ball, do you think that the federal government is going to be providing more money for lost income and support for people? So if you go into your crystal ball, we'll just go the order you're on my screen at this moment. So that's Sally, Mindy, Melissa, and Jim. Thoughts on either crystal ball or other advice to anyone who has dialed in today?
You know, the answer is yes to the first question, but the second is I do think to use this, again, to use this as an opportunity to think about what happens post this crisis and what you look like as an organization, for profit or nonprofit, how it changes you.
Mindy.
Okay, sorry, I had to make sure my unmute worked. Yeah, I think absolutely this is the first of a very big tier of more money that's going to be coming down the pike in order to help. If I had a crystal ball, I would say this is the very big first run, but I can only imagine there's going to be more. The loan, for example, is generally limited to 2 months worth of payroll is kind of the concept, and I'm not sure that's going to be the end of it. So I think we'll see more, and we just have to keep rolling with it and trying to stay ahead of it and doing seminars like this to keep everybody online up to speed. So we'll keep at it.
Great. Melissa.
Full disclosure, I'm that bad student in the class that was actually trying to read up on another issue for you all. And so I was distracted. Don't know what you all said, but here's what I guess I will say. I guess I do see the silver lining in terms of assessing, both seeing the value and what the nonprofit sector contributes, what the governmental sector contributes, what public health contributes, that there are, and the need for collaboration and for so many different sectors to be working together with business. We're just seeing really exciting examples right now where a donor is interested in finding a nonprofit who can host an activity because there's a business that wants to, start producing, more equipment, and, can we get some charitable money into that? And, so seeing the intersection of everyone working together is very exciting for me. And hopefully that will stay with us beyond the next few months.
Thank you. Jim?
Yeah, I agree with what everybody said. I think there probably is yet another wave unless things end quickly, which it doesn't look like it will. I think it'll be executed with, incorporating the learning of what's going to come with this, the waves and what's not going very smoothly or very quickly right now. And then, we have been talking for the last couple of weeks. This is a legacy moment for us as an institution to, really honor the relationships of the people that have been with us and, do things to be a banker, but really protect and preserve the strong organizations that we deal with. It's really one of those moments where we can, and same thing with all the nonprofits here, you can show what you're made of, what your value is, and how you're going to, get your message out about why you are there.
And I would encourage folks in doing that to stay true to your core. While this is also the time for innovation and new partnerships and collaborations, there's also value in remembering really sort of where are you really good? What are those skills and those programs and services where you excel? So that as people have all of these amazing ideas for how your organization can be serving the community or serving its customers during these times, that you're able to run that through your filter of what you're really good at. And if you're really good at it, explore it. If that's not something that is your forte, now may not be the best time to take your energy and start moving over there, as opposed to thinking about who else in the community is really good at that. It's some amazing things are out there happening right now, particularly by a lot of you on this call that I know are working pretty much 24/7. If even in those moments when you're sleeping, I suspect you're dreaming about how to respond and what to do. So to make sure that you take those moments to remember the good work that is being done, that you are doing, and to have an occasional dance party or a dance break. And I will, I'm still working on that one. My first one totally flopped. So, but you might see something come out this week for a little 5 to 7 minute break that everyone can actually take to just rejuvenate and to move around a little bit. So I want to thank everyone for participating in the call today, particularly to thank Mindy, Melissa, Sally, and Jim for taking their time to share their insights and expertise with everyone. There will be another call next week. We'll have one on Tuesday, which I think is April 7th, also at that 1 p.m. slot. So I will send out with this resources from today survey link. So I would love feedback. If there are better days of the week, better times that work for you, by all means, please let me know. We're trying to be flexible. If you would like something set up daily, I will make that happen. If you want something set up once a week, we can make that happen, or anything in between. Not necessarily daily with everyone on this call, but something that just gives you that opportunity to check in. So thank you again.
Melanie, before you stop, I want to say one thing. I want to thank Melanie for putting this together and for doing all the work to send out the link and get all that organized. Thank you. And it reminded me that where we're talking about opportunities to kind of think about where you're at and your strategy and whether it might be other organizations, that's what Melanie does. That's great use for Melanie. And also think about mergers and, those kinds of collaborations. Like, not to be scared of those. And I know that is scary. That kind of change is really scary. But that if we're looking for the end result, kind of coming out whole on the end to continue to serve the community and its, most urgent needs, kind of be open to those different kinds of collaborations. Thank you for all the work you guys are doing.
And thank you for those kind words, Melissa. And with that, we will end this session and encourage everyone to take a moment to physically smile, even if you have to do it with your fingers pushing up the edges of your mouth. It will have an effect on your brain, I promise you. The research has said so. And with that, go forth, be well, take care, be safe, and we will see you in this virtual space somehow, some way again.
Thank you, Melanie.
Bye, everybody.
Thank you. Bye-bye.
Thanks, everyone. Bye.